Welcome to the Best of US weekly review, where we dissect certain aspects of last week's market conditions, the market performance, and we get into a couple of the breakouts during the platinum call, swing trading call that we have on Fridays at 11:30, and Kerry's Zoom call that we have at 3 o'clock Central Time on Friday as well. So let's get to it. First off, let's start with Kerry and his view of air test systems, AEHR, and applied digital.
First thing I wanted to reemphasize, I've said this before, I think that Air System, AEHR, is a very good buy right now. They are a company that was growing at 50% per year, and because of their high tie to on semiconductor, whose main customer is Tesla, and the fact that you didn't buy a electric vehicle in the last year, their sales are down. They're only growing at 25%. But what impresses me more than anything about them, they have no debt. They don't pay any interest to anybody, so they have no debt. So be aware of that. Also learn some more about Applied Digital, APLD, again, a very depressed stock. I hope you saw on the Discord and the video that I did where I shared with you that some very large hedge funds and mutual funds have in last quarter had increased their holdings in some cases by as much as 400%, many millions of dollars of this stock. This is a small company that owns 3 data centers. They kind of got into the data center business as a means of mining Bitcoin. When China threw out the mining of Bitcoin, a lot of these miners were looking for a place to house their servers, and this company got into it. They have an interesting twist. They have a collaboration with a company that builds wind farms. So on all 3 of their data center locations, they are adjacent to a wind farm. So what they say is these wind farms, and they're in North Dakota and out in a very remote part of Texas. So they have ample wind, and so their power is very cheap. And if you know anything about data centers, this is going to be one of the controlling factors of how data centers grow and where they land, because of the high cost of electricity. And what the article I read was that where they're located in North Dakota, in one of the communities, it's a 1,500 person community, and they have this massive wind farm out there, and they don't have anybody to sell the electricity to. So Applied Digital built the data center, and they pick up the excess. So it's very cheap. The problem is, in fact, one of our tribe members wrote me and says, I happen to live 25 miles from that center, or that center in North Dakota. And the problem they had in January is we had a blizzard, and it knocked out the power from the power center, and that kind of set Applied Digital back. But they have gotten a loan from the North Dakota Bank to create auxiliary power that can come in and take care of it.
Bitcoin has been on a rager right now. I mean, it's like a Ibiza rave season for Bitcoin, straight up. And a lot of this is being driven because of the 11 approved ETFs that are now seeing big inflows, up to 700 million a day coming into these ETFs. Now, what is the difference between what Grayscale ETF was or Trust back then in comparison to the ETF now? When prior to the approval of these ETFs had to buy future contracts, which was not the actual Bitcoin. Now, when you buy say a Fidelity Bitcoin ETF, they are actually buying Bitcoin. Now, Mark breaks down in this next video about how many Bitcoin have been lost and will never be found, and the amount that is been basically allocated to Bitcoin and will never change, and how this influences the prices.
Now, a little good news. If you were into crypto this week, it worked out pretty well for you. And I know it fluctuates around, but this week, Bitcoin reached a new record high price. Part of it, the UK financial regulator said it would allow the trading of cryptocurrency-backed securities. And then you dig into that a little bit. They're not going to allow the retail customers to do it, just the institutional guys in the UK. Right now, the demand for Bitcoin is exceeding the daily mining capacity and the float. As long as the newly formed Bitcoin ETFs are continuing to receive new investment money each day, the demand for Bitcoin will exceed supply, resulting in a higher Bitcoin price. On Tuesday, BlackRock's IBIT Bitcoin Fund saw $849 million worth of inflows in one day. We had $1 billion of inflows last night into the ETF complex. As long as that is positive, the price is going to keep grinding higher. Once that becomes negative, you'll see the first real correction, and that was stated by a crypto billionaire, Mike Novogratz. He was on a lot of the shows this week. You can see how that's gone, and now we've got 2 days. Again, here's an engulfing bearish candlestick yesterday, and you can see what happened. We got confirmation. So we'll probably see, again, Bitcoin come down, relieve some of that upward pressure, and then we'll watch the patterns and see where we can predict it. I have been watching it for a few days. Just look at Bitcoin here. You see on the daily how we look on a swing trade. It's now trading below the 9. If we were swing trading this would be the day you get out for sure. If you would have gotten in back here and used it, at least my trading plan would have get me out today on this. Again, we're seeing the MACD and the slow stochastic rollover on Bitcoin. So just, the charts are there to help you. Anyway, Bitcoin and crypto is, hot. It's very volatile. I don't plan, for me personally, it's a speculation that I got into. I'm not planning on selling it just because why would I sell something that I just want to see how the experiment ends. Only 21 million of these are going to be there. 21 million, 19 million, I think, are produced. I think they've lost 4 to 6 million of them have been lost. So it's one of the commodities or investments that you can buy that actually is fixed. If you get in gold and silver, they can always mine more gold and silver. You get oil, you can always drill for more oil. But in the Bitcoin world, there's 21 million. So it'll be interesting to see. It'll be interesting to see what comes out of that. So anyway, that's my Bitcoin splurge for today.
We've talked about this in the past, and that is the rising wedge formation that the S&P, Dow, and the NASDAQ have all been doing. In this next section, Mark breaks down the breakdown in these indexes and the break through the bottom side of the trend and what that could mean in the coming weeks and months.
So here's the daily SPY, and it goes back, 2-3 months. And you can see we've been stair stepping up, and again, we're going sideways here. These right here, these are gaps. It'll probably be filled at some point, down here at the 445 level. But I've been kicking this out and showing you this rising wedge, okay? And you can see this is the S&P. Here's the MACD. We've had a MACD crossover, the signal line. The slow stochastic is falling off, okay? It's been right along the upper level for a long time, falling off. You can see what's happening today. that we're seeing for the first time all the way back to the end of October, we've had this long-term lower low line. And today we're seeing it fall below, still touching. Just keep an eye on that, because a rising wedge, if this falls, we could see quite a fall on the S&P just from a technical point of view. If we go over to the Dow, we're seeing the same thing, and you can see we've hung on to it for the most part, except for one day. And today we're seeing it fall off that lower end of the rising wedge. And again, we could see that come down to, I estimate, if it would fall, and it doesn't have to go straight down, to about 375.54 on the DIA. Okay, that's just from a technical point of view. Doesn't have to happen, but that's why we watch these patterns, and that's why they are patterns, because over a lot of times this shows the probability. We come down, the MACD is heading down. We've got a slow stochastic heading down on the Dow. And then for the Qs, again, here we are. We're riding this wedge. It gets up to a point, and now here we are. We kind of touched along it for a while, and then today we're seeing it pop down again. And so, again, if this comes down, we're look at the MACD falling off. Look at the slow stochastic just falling off the planet. So when you think about trading and you think about what's in the Qs and what drives the Qs, and we're talking about, NVIDIA. NVIDIA was in kind of a rising opening wedge until about the end of March, and then we saw it go into this kind of a rising wedge situation, and you can see it pop below that, and we'll see what happens with NVIDIA. But again, the MACD, we're seeing this histogram go down negative. Look at the stochastic on NVIDIA. MSFT, Microsoft, okay. Again, following up a rising wedge, kind of hit bottom a little bit there, came up, and we're just still hanging on, trying to hang on as much as we can on that bottom line. But if this would break, we can go back a little further. You can see where the low was. The low is here, and we're just making a longer, lower low line. You can see where this would end up if it breaks out of this trend. In a probability would end up down here in the 370 level.
There's a trend going on with all of them. They're all starting
Yep.
to show breaking the bottom line.
Yep. Yeah. So just go back and look at the long term. That's what I've been doing on, where's this market going? And don't focus so much on the day-to-day ups and downs. Go back and see, and you can do this yourself. I mean, it's easy to see. And you can see basically, where we're going to go potentially, not always. Again, we have a little bit of a bump in the MACD with the stochastic down on Microsoft. I don't know if I did it with Apple. Oh yeah, see, Apple's you can always see right here, it's in a downward triangle. And this one, if that's the pattern I see, like here, only steeper, we're probably going to see a rise in Apple, according to the technicals. And you can see down here, we're starting to see a little bump in the MACD and a little bit on the stochastic. So again, I would draw a line from the higher highs to the lower highs, and the lower lows to the lower lows, and you get a wedge going down, and a downward trending wedge usually will break up to the upside. So this is what I've been looking at.
Most people don't know that the bond market is 6 times the size of the global equity market. It is gigantic. It is how companies, municipalities, countries raise money instead of going to a banking system to borrow money. So in this next section, Mark and the tribe break down bonds, how they work, and how when you buy them, what you should expect. This is a real good educational piece, so stick with it.
I have a question. I'm not sure if this is the right time, but have you ever resold, like you had mentioned on the Discord that you can buy a treasury, and then if the rates were to go up, you could sell the treasury. And I didn't know that. So I thought that's a great piece of information. Have you ever gone through that exercise?
No, I haven't. I haven't personally myself, but a lot of people I work with did that all the time. They dealt with bonds and treasuries and they trade in and out. And um, when you go to Fidelity and you buy your treasuries, you go to new issues. You know that button, new issues,
Yeah.
and that's
Yes.
the new issues. If you go down just below that, you'll see uh, where it's not new issues, and you'll see bonds trading on the market. They'll have a bid and an ask. I believe there's a commission on that to do that, but you can put your bond on a market and sell it. Now, if it's you might get it if the rates are against you, it might be below par, which is below the price you paid. Let's say you paid, you know, you paid 1,000, you got 1,000, and your par's one, it might be 98 cents you're going to get back, or 95. If the yield has gone with you, you may get par plus $1. It may be $1 you're ahead. So you just have to kind of watch it. So a lot of people, what they do, they play with the TLT, which is a 30-year, 20 to 30-year treasury bond ETF that's pretty popular. And the same thing will happen, during the financial crisis of 08, 09, if you had been in before the crisis in the TLT, the bond prices crashed, and that caused, or the bond yields crashed, causing the bond prices to rise. And that's what happened. So the price of TLT went up when the bond yields went down. And so the same thing would happen on an individual bond. If you bought a 30-year bond, and then all of a sudden the yields went down. Let's say I have one I'm just playing around with. I think I told you on the Discord call, I bought it at 4.5%, a 30-year bond. Okay, or yeah. And so I'm just watching, and as yields go down below that 4.5%, the price of my bond has gone up. You can see it grow because at some time, let's say that bond goes down to, or the 30-year goes down to 2%. Okay, now I'm up 2.5% over what the price is today. People are willing to pay more, for that 4.5% over 30 years than they are, then they can get a new bond at 2.5%. So that's where the value comes in.
That's your, I don't know if hedge is the right word, but that's the thought process that you're buying that 30-year bond so you could essentially lock in that rate should the rates fall. If the rates go up, then you're going to say, well, I could always sell it. Yep. And then if the rates go up, so I guess it's kind of silly to sit on a bunch of cash at money market.
There's risk involved with that, if the rates don't go down, but think over 30 years, they're still going to pay me out 4.5%, every 6 months, no matter what, for 30 years. Okay. So if it does go down, and it's the same thing as buying TLT, except it's not an ETF. It's the paper itself. So if yields go down, TLT will go up, and that's just the way it goes. And you'll see that. So you could do a TLT also.
They give you a payment that you actually get on that 30-year every 6 months. It pays out the interest.
It'd pay out the interest, yeah.
I'm very new to T-bills, so I'm like, okay, let me buy a 3-month, and then 3 months later it pays out. That, like you said, say you do 10,000, say you paid a 9,000 whatever to get a 10,000.
Right.
Say you get a 10,000. You buy them in units, I guess. 1 unit is $1,000. You buy 10 units. So that's what I've been doing every Tuesdays and Thursdays. It's been my and I'm not used to it, but I've been doing it for since November, every week. And they're just, some of them are just starting to become mature. So I don't see that. I just see it mature and it equals $10,000, but I'm not used to, or to see, what you're talking about. If I buy another longer duration, that'll actually pay out the interest instead. So you said like, 30-year, and every 6 months I'll get a payout, because I've never done anything over 6 months yet.
See, right here is 44. So this is a 20-year right here. I put this on the Discord yesterday. These are available now, at least on Fidelity, until the auction closes next week on Tuesday for these three. It's Monday for this one here, and it's Tuesday or Wednesday for this one. Here's a 20-year. Okay, you can see right here it matures on February 15th, 2044. Here's your here's your yield, 4.5%, and the frequency of the coupon is semi-annually. Okay, so twice a year.
Okay.
It'll pay you instead of paying at the end like the bills do. This is a treasury bond. Anything under a year is like a treasury bill. So
Oh,
you will still get payments out of this for 30 years. Okay. Um,
a bond is a year.
Instead of waiting for the end, because it's 30
Okay.
years. So let's say the expected yield on this, you can see it's gone up to 5.1%. So the yield expectation has gone up. Of course, these are auctions and we have to wait for the results of the auctions. And if there's no demand in longer term paper, then the yield will go up because they're going to have to pay more to get people to buy into this. And so, this may or may not be what ends up being it, but it'll be close, when it
It won't
closes.
be any low. It won't be any lower than 4.5, will it? It'll tend.
It
You're
could.
saying if.
It could.
Oh, okay.
It could.
Okay.
I
So-
doubt that it will, but it
Okay.
could.
That would, if it was because the demand for that was over and above, so it drove the yield down, driving the price up.
Hmm.
But
It would be
recently,
more,
we haven't seen that.
yeah, and it would also be locked into, what the bond market in general, the 10 year is doing and what the Fed's doing. And I don't see them as lowering anything or making that, any different. So
It's
Anyway.
And the risk I take by not engaging is if the rates go down, these will go down, right?
if I buy this at 4.5% and the yields go down to 3.5%, then the value of my bond is worth more. It's weird because when yields go down, prices go up.
a teeter-totter.
Yeah. So why does that happen? Okay. So I own this bond at 4.5% right now. In 2 years, okay, I have 28 years left or not 18 years left on my 20-year bond. In 2 years, the yield is now 1% is all you can get in a long-term bond. People are out looking for yield, and now they can't find any kind of yield like we have now. So now the value of this bond just went up, okay, because it's paying 4.5% or 3.5% higher than what you can get on the market now. So the value went up. So people are willing to pay up for that 28 years of this rate. Does that make sense?
I lost you when you went from 30 years to 20 years, 28 years.
Same thing. Same
Yeah.
thing on 30. Same thing on 30 years. If this was 30 years at 4.5%, and in 2 years, the yield on the 30-year Treasury bill that you can buy brand new, like we do new issues, is only 1%. This is
Okay.
worth 3.5% higher than that, even though I only have 28 years left. So the
Okay.
formulas will work that out. The closer you get to maturity date, which would be right here,
Mhm.
probably the less people would pay for that, but they would still pay more if your yield is higher than what the yield is in the present day with your bond.
Okay. I got to
So
digest it.
if you look now, a lot of the bonds that are coming off, in maturing, where the shorter terms, middle term bonds probably have, because our interest rates for the last 14 years have been low, they probably have very low yields. So they're coming off at low yields, just
Yeah.
like these banks are seeing, and just like the Fed's seeing. The Fed the U.S. Treasury has a bunch of bonds that are coming in now. Let's say whatever they are, they're coming in at 2%, and those funded the government. Now they have to go out, take that money, and repurchase the bonds at 4.5%. So again,
Okay.
it's costing the government more this higher rate.
In conclusion, this has been, I believe, a turning point week. We're seeing action or weakening in some of the big Magnificent Seven stocks. We're seeing a weakening in the indexes, and we are seeing a pullback in Bitcoin, but a rotation into crypto because it is an alternative to currency, to high risk equity markets, to potential increasing inflation atmosphere that we are in. I think it's very important to be cautious at this point in time in this market cycle. When you have enormous exuberance and just exponential blow-throughs in stocks and crypto and the market in general, the bond market can be a very big indicator of what is to come. And right now what we are seeing is that we may be topping out and we may be seeing a weakening in the overall global economic system, and we could see an enormous amount of volatility to come. In the meantime, you've got to be optimistic, you got to be cautious, and you got to be knowledgeable and prepared, and that is what the Best of US Investors is all about. So take advantage of our 50% off our subscription platinum channel price. You can get that below in the description, and join us on our journey of making people a better investor for their lifetime.
Problem with most people is that they don't believe something can happen until it already has. It's not stupidity or weakness. It's just human nature.